Happy to have you back. Today is Saturday, March 11th. After a big week in markets, big day on Friday with huge news regarding Silicon Valley Bank. I wanted to go over some charts, some weekly candles to see what participants are doing, what behavior we're looking in charts, and how market participants are reacting to the news and how market participants are reacting and how that could give us some clues of what's coming next. So obviously, I want to start with U.S. rates with the bond charts and looking at the 10-year here. This is a pretty severe weekly candle. Rates backing off quite a bit here, not only on the 10-year but along the curve. Look at the 5-year too. This is an aggressive candle. Now all of a sudden, this looks like it could back up a little bit more. Same with the 2-year, which had a very big move, very big weekly move, right? So if we look at these charts and we put our Fibos to see where we could go, I wouldn't be surprised if we see these things back off a little bit more. Obviously, we have CPI on Tuesday and the Fed coming up, but this is telling me that participants in the market are taking a breather here. Obviously, that hit the dollar a little bit. It hit the dollar quite a bit against low yielders. If you look at the chart of dollar Swiss, you can see it backing off quite a bit last week. And that's a function of rates, right? FX at the end of the day is interest rate differentials. And you can see clearly here that with rates backing off, dollar Swiss and dollar yen starting also to move lower, this actually looks to me, this dollar yen chart looks to me like it could be in an ABC pattern. So we could see further yen strength. And again, let's see what that means, right? Yen strength and bonds rallying typically means risk off, right? But in risk off environments, the dollar also does well, right? Um, but we like to see the dollar do well versus higher beta currencies, right? So let's look at the dollar against some of the higher beta currencies like Aussie, right? And here I put a count here. Here we see we're probably in a fifth wave, and Aussie had a bad week. That is also a sign of risk off in markets. But if I'm looking at this from a perspective of how to trade it, and we brought this up to our subscribers on our website, we noticed some of these changes a while back, and in the relative value space, right? Let me show you one chart that is pretty interesting to me. This is euro against the high beta like the Kiwi. And I brought this chart up weeks ago when I saw these lower lows pivot to higher lows and breaking a big trend. And now, we make a high, we make a higher high with these lows going higher. One would think that this high right here now gets taken out. One trade that we did put on at a great level was Euro Aussie. And now I could see, a trend forming higher, right? So I'm going to wait the dollar out a little bit, but we are engaged in Euro Aussie. We're also engaged in Euro against the Swedish kroner. And look at that daily chart. That tells me we've been engaged in this trade for a while. Around 1110 area right now is close to 1142. I think that we start seeing these highs taken out, right? As a function of risk off, right? And if you look at this, you look at what are high beta currencies doing against the funding currencies. You could see clearly that there's a hint of risk off in the markets. Again, obviously, it's been a little bit of a chop fest. We have CPI on Tuesday. That's going to dictate a lot. That's going to tell us, what the direction is going to be. We have the Fed coming up. There's a lot of speculation that they're going to need to back off of what's going on with some of the regional banks. Remains to be seen. I focus on what behavior is doing. And to me, behavior is telling me that there's going to be risk off. That's why I like some of the funding currencies against the higher betas. On the equity space, I want to look at the S&P chart, the index chart. I know there's a lot of people focusing on that 3,800 level. We've been warning our clients and our subscribers that the bigger level here is this cluster that we see right here, because this cluster represents a higher low. Made a high, it respected, made a higher low, and it moved higher. If this higher low gets taken out, this cluster right here, which is huge, I think, if this low gets taken out, then all of a sudden it makes this move higher corrective, right? And then we start looking at now possibly this low being challenged. So this is a very big level right here for me in the S&P. The NASDAQ is a little bit worse, right? And let's look at the weekly candles. This is a pretty big reversal right here, right? On the weekly candle. This is a bearish engulfing candle, right? And if we look at the S&P weekly candle, you have a big bearish engulfing candle as well. So I think that these lows are going to get challenged. And if they do, I think that we could see this thing resume lower, making this whole wave here corrective, right? A corrective wave. Very interesting charts. Obviously, if risk off takes a hold of the market, there are trades, there are positions that you can take that have a lot of convexity. Global equities, in the global equity space, for example, one of the things that we've been advising our guys, and all of this is on our website, is Aussie equities. And let me look at the daily chart here to show you what we mean. And we've been tracking this pretty well. We warned about this being a B wave. We went short. We warned about this being a B wave. We resumed the short, and now we think we are in a C wave. This has been respecting every rule of Elliott wave. And I know there's a lot of skepticism out there about Elliott wave, but I think it actually does work. I think the market moves in waves. And now we expect weakness in Aussie equities. Another global equity index that I've been looking at is the DAX, right? And if you look at the DAX futures, you can see also how much convexity this has, right? Again, I like these global equity indices to continue to go lower or to reverse this trend because of what I think is going to be risk off in markets. The dollar, like we said earlier in the video, taking a little bit of a breather, but I do think the dollar resumes higher, right? I wouldn't express it now in dollar Swiss or dollar yen because of what we think could happen in rates. So higher beta currencies are a good play against the dollar. Obviously, when I mean higher beta, you look at Aussie, you look at Kiwi, you even look at dollar. One of our favorites is dollar against the Swedish kroner, dollar stocky, that we've been advising our clients to stay long this pair. We think that this has a tremendous amount of upside. And in the relative value space, obviously what comes into mind in FX right now with risks backing off a little bit is cross yen, right? If you look at the chart of dollar yen, you can see this thing possibly moving lower, like we showed you on the weekly chart. That makes cross yen very appealing at these levels. One chart that I do like in cross yen and the cross yen space is sterling yen. If you look at, if you're like me and you look at Elliott wave, you can see here without me drawing it, a wave one, corrective, big wave, corrective, reversal candle, continuation. I think that we could see this thing dump towards the 150 level now. I think that if rates start backing off a little bit and we see some strength in yen and some strength in bonds again, we could start seeing cross-CN really move lower. That's something that we're participating in. Again, like I want to say, everything that we do here is on our website. We are updating our subscribers up to the minute with our Discord channel. All of those details are on the website. I'm going to put the website on the video so you can check it out as well. One last chart that I want to show you regarding rates is TLT. Look at this. This is a weekly candle on TLT, obviously the back end. Big candle here, big continuation candle here on the weekly. This has potential to me to move much higher. And again, this is price. This is participant behavior. I don't look at many other things than this. If we start seeing this moving higher, I would imagine it is because of risk off. So I am cautious equities. I show you the cluster on the S&P that I'm looking at. This cluster right here, if this low of this cluster gets taken out, you could expect probably these lows to get challenged and possibly even break even lower than that, I would imagine. So we keeping our eyes on rates, keeping our eyes on FX, keeping our eyes on global equities. I think we could start seeing some risk off. There are great plays out there to participate in this market. All of them are going to be in our website. If you like this video, please give it a like. If you disagree with it, leave it in the comments. No offense taken at all. And if you like it, please subscribe to the channel and check out our website. Thank you for your time. Keep enjoying the weekend. See you soon.